Hey guys, spiritual living on this channel is for educational purposes only, and it's not intended as financial advice. So since Valentine's Day, everything's been pretty much correlated together. Link has been a clear winner amongst the chaff down here, along with Tezos, but everything else has sort of moved together. I don't have BSV on here, but BSV having happened, BCH having happened. A lot of hash rate moved from those two to BTC. BCH and BSV have like 2% of the aggregate hash rate between all three of them. So it's pretty clear where miners, agnostic or otherwise, are pointing hash rate right now. If we compare BTC to the world, it's still up year to date, even more so than gold, 38%. It's pretty much led the pack the entire year. There's really been no point in which any of these have outperformed BTC. I think maybe Tesla and maybe Zoom and Amazon and a few stocks, few tech stocks have. But in aggregate, BTC is the clear winner here amongst traditional legacy stuff. And bringing up the VIX and SPX correlation, so the bottom is the rolling SPX 30-day, and you can see since beginning of the year, it's been pretty highly correlated. Over time, it's uncorrelated, but it certainly has periods of extremely high correlation. So it'll be good over time to have the correlation decay, hopefully to zero. It's still at like 70, 80% right now, which is historically pretty high. Another thing I want to see is the VIX, the fear index. I want to see that come down to zero. It'll decay over time naturally. Historically, VIX above 40 has been bottoms or buy opportunities for BTC. I don't expect this to be any different, especially with what's going on in the macro picture. Moving to futures, pretty interesting stuff happening today. So this is OKEX quarterly and OKEX weekly versus spot. So this says that the futures are in backwardation. Futures are lower than spot right now for BTC and ETH, as spot prices are rising. So there's definitely a divergence here. I don't know if it's bullish or bearish. I'm going to assume it's bullish because cash is leading futures right now pretty hard. It's leading Bitfinex as well. So Bitstamp and Coinbase are leading the charge here. One thing you'll see when we're definitively bullish in some way, we'll move out of backwardation. You can see BTC never really did on the weekly here, just kind of zeroed out, as did ETH. And now ETH even has this mega backwardation as the ETH longs on Bitfinex continue to rise insanely high. And looking at Tether, another weirdness, Tether just remains above $1 ever since March 12th. I don't know if that's liquidity or demand. I'm assuming that this will flip below $1 as soon as we're definitively bullish. So I'd be looking for the futures to move into positive territory, and I'd be looking for Tether to move below $1 because that says there's less demand for Tether. Right now, there's demand for safe haven. So when that ends, I'd expect prices to rise. We'll see if that happens. These are CME quarterly, not CME quarterly, but just CME contracts. Historically, they've had a lot of impact on price, I think, in the near term because of this massive 50% plus move we had on March 12th. I don't think they're going to be too impactful. Maybe some intraday impact as far as volatility, but markets just don't move 50% and then move 50% again like that. It just doesn't happen. We had our down move, we had our up move. I'd expect this to just consolidate, ranging mess for the indefinite future leading into halving, which is around 30 days from now. Not expecting fireworks. Again, this is BTC Coinbase minus Bitfinex. Coinbase was leading ever so slightly over Bitfinex. This is just showing that in general, we're more bullish when cash is leading Tether, and we're definitely tipping toward that currently. It's not like day over day. This is a daily chart. You'll see it more in the intraday, but definitely more bullish than bearish on that. This is Ye Old Pitchfork, my favorite and yours. Looking at the previous halving, it wasn't in August, it was in July, so a little bit before then, somewhere over here. You can see how much different we are relatively to the pitchfork. We were pretty much smack dab in the middle on the median line during the previous halving. This time we're technically invalidating the pitchfork pretty handedly for the first time ever, arguably. This blue channels are the price positions where we should be historically based on the trend. So that's all the way up around 1820K. See if that happens again, having less than 30 days. This is MVRV, which is a measure of market cap minus realized. And basically it's looking at when were the coins last moved. And historically, we're in the buy zone again. I don't necessarily look at a single fundamental metric to determine buys and sell zones. I know some people who do, but in general, looking for confluence. So definitely snagged a buy signal here on that March 12th drop. Stock to flow. This is looking to Bitcoin.com, by the way. Stock to flow, I'm not a massive fan, but looking at where we are and where we should be based on the algorithm or equation, we're pretty close to 7.88K range. So after having it's projecting a move to the upside, that's just how stock to flow works. Here's the logarithmic curve, similar to the pitchfork. You can see we're ever so slightly creeping up. This is really cool, by the way. Ever so slightly creeping up back into the historic lower band here. Definitely will be interesting if we do creep up and return to the median of this, which is even higher than the pitchfork at around 22. I don't really see, 33K median isn't on here yet, but it'll be projected out 2021, 2022, something like that. I mentioned the 100-100. This is MA-EMA cross on the weekly on the last video. Another odd metric that I see every once in a while, but it's pretty clear cut. So you want the EMA above the MA. The MA is the yellow here. You can see the bearish period move into the bullish period pre-2016 halving. And right now we are technically bearish on the cross, overall flat. I mean, we've ranged for so long at this point that most EMAs on any time frame are just going to be zeroed out and flat. You can also see that despite the bearish cross here, based on previous crosses, we moved up pretty strongly. So it's a bit of a mixed bag on the near-term outlook, but the EMA is above the MA. Take that what you will. This is the daily cloud, my gold standard for what the hell's going on here. If we're above the cloud, we're bullish. If we're below the cloud, we're bearish. If we have anything flat anywhere on the cloud that acts as a magnet for price, you can see we had that range put in on the March 12th low. Didn't make a higher high, didn't make a lower low. Boom, cloud prints 50% until we hit it. And we hit it, we're below it. I'm really uninterested in any longs until we're above the cloud like we were here. So this closes above 7.2 with a bullish TK cross with a bullish cloud. We'll get there, it'll take some time. It probably won't even happen pre-May, but it's a slow grind at this point. We've moved from 3.8 to 7.2 in a month. I mean, that's a mammoth move from 10.5. So volatility is just insane. It's going to need to consolidate again, similar to November, December, January 2019 to 2020. I'd expect similar chart pattern. Something will emerge here, ascending triangle. I don't know what it'll be if it's bullish, but overall, that's what I'm looking for in the next couple of weeks. This is the 5200 cross, and again, any EMA is just going to be just a mess because volatility, again, is just insane. We didn't have multi-month trends here necessarily. We had just extreme volatility. So any EMA is just going to be a garbly mess. Again, technically bearish. You want it above the 200. It's around 8.2, something like that. So your best, most prudent, safest entry would be above 7.2 on the cloud, above 8.2 on the 200. So I can see it consolidating between 7.2 and 8.2. Just a nice range, multi-month, pre-halving, that sort of thing. Moving on to ETH. I'm really curious as far as what's going on with those longs on Bitfinex. It's like a $10 million position at 153 ETH price, if it's 5x. If it's not 5x, it's a $50 million position at 153. So whoever's long there is pretty confident that it's not making lower lows or going any lower anytime soon. If it does break 100, those longs are going to be in a lot of trouble because you're going to have a cascading margin cascade waterfall sort of thing if they start to unwind. So it's definitely something to watch. If we break 100 and all the DeFi stuff starts flying off the wagon as well. But otherwise, I like 750 over the next 12 to 18 months. Sounds insane. That's what the cloud wants. Again, we printed a high, printed a low, didn't make a lower low or higher high. We're in the range, and it prints this 50% of this macro move. This multi-month move, 50% is around 230. So as far as an entry for the edge to edge, I'd be looking for 180 to 200 with a bullish TK cross. Everything I list here, man, 750. So that $50 million position might look silly now. It'll look great if we move to 750, obviously. This is the weekly cloud singled. Again, it kind of says the same thing, which is one of the reasons why the settings for the cloud really don't matter if you know what you're looking at. The E to E on the weekly is essentially the same as a bullish Kuma breakout on the daily or on the weekly with the single settings, if that makes sense. So it's telling you anything above 223 in the next few months towards the end of the year, even April to December would be a long entry. So you can just set an alert and watch it brew over the next few weeks. Another thing you can look at for ETH, not a lot of price history for high time frame weekly EMAs or anything like that. But the 20 SMA, which is what this is, has been a pretty good predictor, just like BTC, bullish and bearish trends. Again, right now it's a bit of a garbly mess because we've ranged so hard. Volatility's been insane over the past year. But if it's above the 20, above 223, above 190, all these entries start ticking as far as confluence is concerned for bullish long-term entries. Here's the daily cloud doubled settings. Again, 189. You printed the range and boom, that's the 50%. So ETH has a ways to go yet. If you compare this to the BTC cloud, BTC already hit its 7.2, 50% target. And the safest longs are anything above 189. And that'll take weeks, I'm pretty sure. I don't think it's going to happen anytime soon. Talked about this in the last video. This is the 4-hour with the daily 200 on it. And there was a nice ascending triangle projecting a move 190 to 200. I mean, it's still there. The thing about chart patterns and the cloud is these multi-month like flat Kumos or patterns, when they project the target, it doesn't necessarily go there in a straight line, obviously. And just because it didn't reach the target immediately doesn't mean that that's still in the cards going forward. So I'd still expect a break of the 200 with a move towards $200, psychological resistance, over the next few weeks. And now just a few other charts I'm looking at. This was a really nice stellar BTC, arguably Wyckoff accumulation thing I've been looking at. Any of the Wyckoff heads can let me know in the comments if this is super far off. But I was expecting the potential for a shakeout move down, didn't get it. So as this moves into higher highs above 850, it'll consolidate here. The real key is above, this high at 950, 940, whatever this was, sats. So again, set alerts if you're trading this, between 850 and 950, because that's really where the bullish continuation markup phase will begin if this is a Wyckoff accumulation pattern, which I think it is. This is Zeek BTC. Historically, it's been below the 200 for most of its life. VPVR consolidation shows, this multi-month, this was like 8-month consolidation. It broke up, broke down. Now it's got this nice Adam Eve situation. So being above the 200 for Zcash may be the new normal going into the next few months. I like that it accumulated above the previous accumulation zone. So just something to watch. I don't have any right now, but it's definitely worth keeping an eye on over the next few weeks, especially if BTC and ETH start to move up and consolidate. If BTC consolidates between 7.2 and 8.9 or something, I'd expect alts to do pretty decently. Here's Doge. Again, this is a daily chart, daily 200, daily cloud. 30 sats is what I'm looking at. This is I don't know how many months this is at this point. It's many months, much months, such accumulation. Anything above 30 sats, again, I'd set an alarm for 30 sats and just wait. The cloud really likes it above that price. You can see all the resistance got burned off. and it's just flatlining. Looking at the weekly B bands, it's never really been this tight. So the colors are if price is below the median line while it's consolidating. And this just illustrates how tight these bands have been over the past 4 months, whatever this is. So if you're trading Doge, the old adage is just treat it as an oscillator. 100 is the sell. Anything below 30 is usually accumulation buy zone territory. And it's just been below 30 for a year plus at this point, I think. So keep an eye on it. I wouldn't be surprised if it just popped one day and people started piling in. Not that I'm like mega bullish on Doge, but the tech looks really good. Looking at ES, which is S&P futures, it was printing this inverted head and shoulders, which was another reason why I was pretty bullish on BTC and ETH and crypto in general, especially with the high correlations. So if this continues to move up, to 3K or return to 3.1, something like that, again, I expect us to be bullish for crypto just because we've been correlated so highly since the beginning of the year. And then lastly, just looking at oil, I just love how oil always puts in these massive divergences. This is the 4 hour. It hit $20.19, whatever it was. Just an insane drop. It looks like an altcoin. Put in this really huge divergence, and I'm watching this inverted head and shoulders as well. And again, if all this stuff starts to turn up, I expect crypto to do pretty decently, just because of how we're correlated currently. That's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.